Hello there, welcome to Venture Capital with me, Katie Pilbeam, where we're going to be discussing some of the week's biggest business news stories, find out what's been moving and shaking the global markets, got corporate news coming up and exclusive interviews. We've got a jam-packed show, so stay put. Now we're going to get stuck in and talk about China, because the world's second largest economy has been setting off all kinds of alarm bells this week. It's now on track for its poorest performance since 1990. After growing at an average annual rate of just under 10% for the last 33 years, the latest figure of 7.5% is causing concern.
It's the news we didn't want to hear from China. Its manufacturing sector, the backbone of its economy, continues to slow.
More signs of weakness in the world's second largest economy.
We've got an economy which just isn't slowing, Trish. It's an economy that's collapsing.
Considering parts of Europe are dealing with flat or even negative growth right now, why all the fuss over China then? Well, firstly, let's take a look at what 7.5% of China's economy actually equates to. Well, it equals the whole of Switzerland's economy, one of the wealthiest economies in Europe. So if China's growth was to stay at this rate, the country would be adding the whole of the Swiss economy to its balance sheet every year, or 3 Greeces, if you put it like that even. So is 7.5% such a disaster? Well, right now I'm joined by Andy Shea here, former Morgan Stanley Chief Asia Pacific Economist, joining me from Hong Kong today. So Andy, can you tell me, what do you make of this 7.5%? Is it such a disaster?
Well, I think China is going through a necessary phase of adjustment, rebalancing the economy. Over the last 5 years, China boosted investment too much, partly to support the global economy because of the financial crisis. But the investment has led to overcapacity. So there's a need to scale back investment.
Right. Do you think maybe China is a victim of bubbles, perhaps?
After 2008, the Western countries cut interest rates dramatically, so the hard money started to flow into the emerging economies. And China did receive a lot of hard money. My calculation would be significantly more than $1 trillion US. That partly contributed to this real estate bubble in China. And it's part of this overinvestment story. Now, as the Western countries are preparing to tighten monetary policy, in particular in the United States, so we are seeing hot money leaving China.
But are the glory days over for China?
Well, I think that the people used to be very bullish about China, ignoring all the problems. Now they are all becoming very bearish, thinking that China's growth is over. I think this is wrong. And as I pointed out before, that China had a bubble and needed to go through adjustment. Now, I think we should not be writing China off. China's per capita income is only $6,000 US, and it's got a lot of upside. Chinese people are very productive, and probably the most productive people in the world today. And considering they're paid so little, so there's a lot of upside potential. I still believe that China will reach $20,000 US per capita income by 2030, and that will make China the largest economy in the world.
And moving on to the Ukraine, because right now the ex-Soviet country is torn between 2 trade zones. Now, as you can see, stuck right in the middle just there. Now, Ukraine faces a choice: either go for the EU free trade zone or join the customs union with Russia. Now, if Ukraine chooses to go westwards, it would become part of the biggest trade bloc in the world. But the question is whether it'll be worth it. The country would be expected to spend money in order to meet European standards for infrastructure, the environment, and the quality of their goods. Plus, Ukraine enjoys oil and gas discounts due to their close relationship with Russia. If the country enters the EU, then they would be expected to pay the same price as the rest of the EU countries. Now, trade with Russia is expected to decrease by up to $2 billion annually. On the other hand is the option of joining the customs union. Now, this will leave the trade with the EU at the same level that it is now, at the same time boosting exports to Russia up to $10 billion annually. So economically, the situation seems pretty clear. However, politically, if Ukraine is ready to pay the price, it may join the EU club, for better or for worse. Thailand has become the first country to bin the Bitcoin. It's now illegal to use the virtual currency after the central bank declared that it's not a currency. Now, this is the latest blow for the Bitcoin, the peer-to-peer cash system, an alternative to traditional currencies, having had its fair share of controversy since its introduction 4 years ago. Now, according to an online statement by Bitcoin, the ruling came after months of meetings between the company and Thailand's central bank. Now, Thailand justified their decision, stating that the ban is due to a lack of existing applicable laws, capital controls, and the fact that Bitcoin straddles multiple financial facets, which all sounds rather complicated, really. So we've got an expert to break this down for us right here. I am joined by Christopher Hartwell from the Skolkovo Business Hub for us. Hi, Christopher. So can you tell me, is this the beginning of the end for the Bitcoin?
No, not really. I mean, many of the things that Bitcoin said are, in fact, exactly correct in terms of why it was banned, in terms of the problems, the difficulties it's having in Thailand. It's not really that it's banned per se. It's that Thailand isn't, I don't want to say advanced, but its legal system really isn't sophisticated enough to deal with what Bitcoin is.
Is it an overreaction by Thailand then?
Well, no, I think it's an overreaction from the way it's been reported, including by Bitcoin Limited, the company that acts as an exchange for Bitcoin in Thailand. I mean, the Central Bank of Thailand really doesn't have any authority to ban a currency or to ban Bitcoin per se. It does have legal authority to deal with exchange rate movements, with capital controls, as Bitcoin mentioned, and with things that could impact the exchange rate of the baht. So right now, what they're basically saying is we need more time to study what Bitcoin is and if it has an effect on the Thai baht, on whether or not it's going to affect the exchange rate, which is what they're really concerned about.
Do you think there's now a fear that other countries will follow suit, though, investigating the currency more?
Oh, of course. I mean, that's always been the worry about Bitcoin. Bitcoin was great because it was anonymous. It's not backed by a central bank. It comes about from this computer algorithm. So it's really an alternative to central banking. It's an alternative to normal monetary policy. And obviously governments are threatened by that. Central banks are supposed to have a monopoly on the currency. That's the whole hallmark of monetary policy today. So banks are threatened by it, governments are threatened by it, and there will be these kind of ongoing investigations.
And now time for some corporate news from here in Russia then. Russians have been going mad for Mercedes, with the luxury vehicle's latest offering selling out in just 3 months. Russian sales were up 20% in total. And more bad news for Russia's aircraft maker Sukhoi Superjet, with first half profits decreasing by over 100%. Plus, Russia's gas major Gazprom has announced it will supply more natural gas to Europe this year, having already increased supplies by 10%. But despite the increased demand, Gazprom is still set to endure a 10% decline in profits overall. This week has witnessed the collapse of the world's biggest fertilizer cartel, sending shockwaves through the industry, pushing down shares in potash producers worldwide by around a quarter. Panic has been spreading on global stock markets since the Russian giant Uralkali decided to pull out of a joint venture with its Belarus-based partner, Uralkali. In the agricultural world, this is the equivalent of Saudi Arabia dropping out of OPEC. And this could all result in lower food prices because farmers will pay less for their fertilizer to grow their crops and pass those discounts onto the consumer at the checkout. Also, this could mean an increase in the size of crops, so people will get to enjoy a bigger soybean for less. Russia could soon welcome a budget airline. Aeroflot, Russia's largest airline, is planning to offer flights to savvy savers as early as next year. Now, customers could be snapping up tickets up to 40% cheaper than traditional airlines. Now, as it stands, Russia doesn't have a budget airline and flights are much more expensive than elsewhere. For example, a flight from Moscow to Vladivostok in the far east of Russia, so a domestic flight, is twice as much as the cost of a flight from Moscow to New York, a different continent. But while there might be a gap in the market, the problem is budget airlines have a history of failing to take off. Now, two low-cost airlines, Avianova and Sky Express, are two examples of this. Both companies folded in their quest to do so. So now I'm joined by the founder of Avianova. We've got Andrew Pine just here to give us the lowdown. Hello there,
Hi,
Andrew.
Katie.
Thank you for joining me. Now tell me, I want to get an idea as to what Aeroflot are up to. What is the thinking behind this? Because why don't they just reduce the prices of their flights? Why create a whole other airline?
Well, Katie, I think if they simply reduce prices, they go out of business very soon. So I think the logic here is to create a unit which will be operating on a low-cost basis and then to pass those costs onto the consumer. Why are they doing it now? I think, as you've said, there's been a gap in the market for 2 years. They're seeking to occupy that space. But they're also facing very sharp competition now from foreign low-cost carriers coming into Russia. We've seen EasyJet, for example, start flying from London to Moscow. So I think also Aeroflot are trying to learn some of the low-cost tricks in order to enable them to compete more effectively in the overseas market as well as the domestic market.
And is it all about stamping out competition in terms of the Russian market?
I don't think it's about stamping out competition. I think, you know, the basis for a low-cost airline is that you grow a new market. You encourage people to go from coaches and from trains onto planes. So I would say, to be charitable, it's about growing the market.
As a consumer, if I'm going to buy a ticket and I see that Aeroflot are offering a certain price, their new budget airline offering another much lower price, I'm going to go for the lower price.
Yes,
it's still a hard concept to understand. Do you think that the brand of Aeroflot could be damaged as a result? I think it's risky.
I'm not so sure the brand would be damaged, but you're right to raise the question, because we've seen, I don't know how many, 50, 60, 70 examples of full-service airlines trying to set up low-cost airlines. Only a handful have been successful, because what normally happens is that the low-cost airline becomes too successful and it cannibalizes the parent company. Prime example would be British Airways and Go, which we saw 15 years ago. But, you know, there are numerous examples. And I think this is the real challenge that Aeroflot will have to face. How do they give room for the low-cost airline to develop and be successful, but not give up their core market? So that's a challenge that they will definitely have to overcome.
Well, I think at the end of the day, the only winner in all of this can be the consumer. So hopefully for all of us it will work out. Thank you very much indeed for your time today.
Thanks.
Andrew Pine just there. And that's all the time we've got for Venture Capital for this week. Thank you very much indeed for your company. I'll be back same place, same time next Sunday. So I'll see you then. Join me.